You're listening to Pre-Market Prep. I'm Brianna Valesky in for Joel Elconin. I'm on the line with Scott Redler. He's the chief strategist at T3 Live and T3 Trading Group. Scott, thank you for joining us this morning.
Thanks for having me. Another week. Here we go.
Another week, here we go, getting into the heart of earnings season. What is showing up at the top of your radar this week?
Well, we get to see Google and Amazon on Thursday, and
Mm-hmm.
both those stocks have had great pre-earnings moves, which have actually been welcomed. Sometimes traders get all anxious if a move's going to happen after earnings, and you have, all that event risk. Well, Amazon gave you a move prior to earnings, and so did Google, and actually so did Facebook. And in the same time, you had Netflix miss results and was put in the penalty box. So pretty, like I called it cute last week, that Netflix has bad numbers and basically is going to probably be in the penalty box for a while. And then on the flip side, they're running Amazon and Google and Facebook before. So at least, if you're trading pivots and looking for trades, it's been a nice long trade since then. So you don't even have to maybe even take that earnings risk because it already made the run prior.
Well, we got some earnings from Morgan Stanley this morning. What did you think of that report?
Well, they definitely missed on, on,
Yeah,
on
that's
most
for sure.
metrics. And in my
Mm-hmm.
note this morning, I was writing about how the market gave the banks like a free pass. So last week, earnings reports came out. They were all lower on revenue, but earnings were better because of lower expenses and lower legal bills, et cetera, et cetera. So if you remember, Goldman Sachs came out and it was down $3, went green and rallied 5. So the question is, can Morgan do that also? I don't think they do it the same way. I think it's going to be kind of like a J.P. Morgan event, where J.P. Morgan came out with earnings. It was down that day, and then the next day was up and right back into the upper end of the range with the market. So I do think, Morgan might not be buyable today, but I think that, near 31, 31.50 is probably a better buy than a sell, especially if, our markets are going to have a seasonal up move continuing over the course of the next, 4 to 6 weeks.
You're also taking a look at some social media names today. I see you mentioned Facebook and Twitter. What are you seeing in Facebook right now?
Well, Facebook was, a good trade for us last week. You had two different entries on that chart. One, actually 2 weeks ago, you had that like red dog reversal when it went below 90 and a half and 91-ish and then reclaimed it. And then for the last week and a half, it's just been trending higher, cleared that pivot of 94.50, and now here we are within $2 of the all-time high. So I think at this point there's no clear setup, or tight setup to buy in Facebook. But today with the down 50 cents with the futures, maybe you get a red to green trade, which would be good for cash flow for traders. But ultimately, that 99.24 pivot, I think it gets they're going to challenge that thing at least either before or after. And my gut tells me at some point this year, Facebook is north of 100, maybe even closer to 104, 109. I've been pretty much a Facebook bull. Every time that we've spoken, it's been one of the few stocks above all the moving averages, trading well technically, etc. And then the last 2 weeks, Twitter became something that I got reinterested in again when you had that quick 2-day move on volume that happened on October 2nd and 3rd. That cleared that descending channel and kind of put it back on the radar. And then ever since then, it's been having these volume spikes, and then all of a sudden you hear, the Prince has 5%, and now Steve Ballmer took a 4% stake. It's one of his
Right.
biggest. Hmm?
Right. We were debating last week on the show whether that tweet coming from that account that wasn't his usual one was an actual tweet, and it turns out it was, and that's his verified account, and he did take that stake in Twitter.
Yeah, and he said that it's his biggest stake in any public company besides Microsoft. And I
Right.
feel like, it's funny though. That stock is flat, and then you get Weight Watchers where Oprah Winfrey was given 10% of a company. I don't even think she had to pay for it, and that stock's doubling pre-market. Just shows you the mentality of things at times. But just real quickly before we leave Twitter, I think Twitter has acted better. They have some new products. I don't think their MAUs are going to be explosive, but I think it could be enough that even before earnings, the momentum that we've seen recently could take it above that 31.50 and get it closer to like 34. So I'm watching that this week for a trade. I have more size of Twitter than I've had in a while. And I think that it's a decent focus, the next few sessions for traders.
Well, let's talk about Weight Watchers. Yeah, Oprah Winfrey is going to get 10% of this company. She's going to join the board as an advisor. Obviously, the stock's going green this morning. What did you think when you heard that?
I said, okay, I guess it makes sense. And then I wanted to see where the stock was trading, and I saw what's it up, 90%
Yeah.
or 100% or something like
Yeah,
that.
well,
So,
yeah, it looks like 100% all the way up at $12 now when it was, barely $7 before.
the stock has been absolutely annihilated. So I know my traders in the chat room were saying, they're already, isolating levels to short it, saying, this is emotional. But then I looked at the chart, and this thing was hovering in the 20s, the mid 20s before the decline of last year. So, you got to be a little careful. I wouldn't be just buying it today up 100% because Oprah Winfrey is joining the board, et cetera, et cetera. But also, if you don't short it with the plan, you can get absolutely annihilated. The gap in the stock there's a gap that starts at 1420. So between 12 and 1420, there's really not a whole lot of points of reference there. And then if it gets into that gap, it could be filled all the way up to 16. So if you're a trader and you're thinking, I just got a short Weight Watchers, just be a bit careful. What I would do is I'd wait for it to make like a 15 to 30 minute high, like just say it makes a high at $13, comes down to 12.50, and then you want to short it. Short versus that pivot of 13. If it gets above 13, you just cover it and then you wait for that to do it again. But if you play like the cost average game where you're shorting 12.50, 13, 13.50, 14, you might not be able to stay solvent until finally you get your pull in. So just be a little bit careful because lots of things can happen in moves and news plays like this.
Some other tech names you had mentioned this morning, Netflix obviously missed on its report last week. What are you looking at in this stock this week?
Yeah, I think it could grind lower. You have an open gap from earnings, so that means that on that down move, nobody thought, it was cheap enough to buy it to fill that gap. So when you see an unopened gap, like you see from, 108 down to where it closed after earnings, that shows you that the strength and the momentum is to the downside. So I do think that below 98, you'll probably see something closer to 94 this week. And then the question is, can it hold that 94 area support? And if it does, might be worth a look for a trade. But ultimately, the stock's in the penalty box. They didn't give it a pass like sometimes they do on earnings. They wanted to see, I guess some earnings besides just sub additions and that whole excuse about the chip on the card and things getting canceled. People are a little
Right.
skeptical of that. So at this point, it lost momentum. It's below the moving averages. So that equation for me says take caution. Netflix is not the name that it was, a few months ago. Kind of regroup and act better and get back above it, perhaps. But as of right now, it's not a go too long. It's more of people are probably trying to press it a little bit, and then maybe some guys will look at it around 93 and a half, 94 if that wants to hold.
What about something like Tesla? We have not gotten their earnings report yet. What are you seeing in Tesla this morning?
It's not as compelling as like last week. We were looking at that lower pivot, thinking it was oversold enough for some kind of bounce, and you had your red dog reversal on 10/13, October 13th, when it traded below 215, came back above it, and then it never violated that, and then you had a little follow through Friday. So at this point, you had your 2-day move in Tesla for your oversold move. It's just like in Netflix has lost momentum. If you look at the candlestick, if you want to learn candlestick analysis, on September 25th, on that outside engulfing day that closed the bottom of that upper flag, that was your signal to get out of the way. And then you actually had downside follow through the next day. And since that, it's been more of a sell than a buy. So maybe today with the futures down, I don't know what it's doing. If it's down a few points, maybe it tries to go green for a trade. But ultimately, for this thing to kind of rebuild, it's got to hold maybe 222 to 223 for a little bit, and then bigger resistance where all the moving averages are curling down comes in a little bit higher, closer to like 240.
One of our chatters wants to know if you can cover a NAVI. It's NAVI on the show. Just give your quick take on this stock.
Quick take, you had a bit of a V bottom, V bottom back up into resistance, and then in the last week and a half or so, it held higher, which is kind of constructive if you're trying to play it for an oversold bounce. I would say as long as it holds, just say above, I'd say above 1150. there's a chance that it clears that resistance that you see from late August to early September, and if that gets, so clears that, your next spot is, 1280, and then I think realistically maybe a bounce could go up towards 14 if it wants to. This is one of those, I'd say dash for trash or treasures for trash type trade. And at this point, you had your oversold bounce. Now the question is, can it hold above this 11 to give you a little bit more of a push, to the 1280? And then if it really wants to get frisky, all the moving averages are curling down, and you'll get a wall of resistance closer to 14.
Jumping back to some of the tech stocks, Fitbit, this is one that I've kind of been interested in since the IPO. Honestly, I know more people who own a Garmin than people who own a Fitbit.
I have a Garmin.
Okay, see, there we go. Point in case.
To be honest, I did buy a Fitbit, maybe 8 months ago. I wore it for 2 weeks, and then I just got bored with it.
Yep.
I don't take, but I've done 2 IronMan, 3 marathons. I like elevation. I like, other things besides just how many steps I'm taking.
For
but
sure.
Anyway, as far as the chart's concerned, it's pretty tight. I've been looking at it from time to time, and, I guess you could say if it were to trade above 38 with force, you could say that this, this lower wedge type pattern might be resolved to the upside, and then you have room closer to 40. Kind of, out of play. It's just on the sideline. But, traders, I know I look at it from time to time also, and every time I buy strength, though, it doesn't work. But one of these times, it seems like it's in the game that, perhaps it's tight enough that above 38, you get some kind of trade back into the low 40s.
You mentioned in your note this morning that Chinese names have perked up a bit. How about Alibaba?
Well, Baba, became a right as soon as Barron said that it can go down another 30%, I think it stopped going down. But,
right.
Not to beat up on them, but anyway, look at the size of that igniting bar on October 2nd. That basic bar told traders that okay, maybe you can get some kind of oversold bounce type trade. Let's see if it has commitment to that, and then those 2 days or that inside day thereafter gave you some clues that maybe you can get a move from above 64, and then it wound up having a nice move. And I think actually some of my traders are short overnight because of that small red dog reversal on Friday when it traded above 72.44, came back below it. It's had a sizable move. So I think that if it's any good, if it pulls in, you could pull in and maybe buy it closer to 67.5. I actually have Baidu on my radar in the next day or two because it's tight. It's lagging a little bit, but maybe it gets a push prior to Google beforehand. And if you see how tight that little pattern is there in Baidu, if it happens to get above, what's this level here? I'd say above like 150, 250 with authority. There's room closer into the 160. So I think there's a trade in Baidu that could be setting up. So it's on my game plan for the week. It hasn't been on my game plan in a long time.
We just got about a minute left here with you, Scott. Any final thoughts on the market? You mentioned that it's a mixed Monday.
I just said the markets have come a long way since that jobs reports Friday. I think it took a lot of people by surprise. It was a fast and furious move. You had basically, if you blinked, you missed a lot of longs, and if you started shorting too early, you probably took a lot of pain. At this point, we're a little overbought, and some of that move is behind us. So now I think the market's going to probably be slower and have to prove that it can continue to grind higher in the midst of what's been so far not a great earnings season, but with those lower expectations. I'd go stock by stock. I would not really look for macro market moves right now, especially through earnings. I think with the prep, you could do it. Like with Morgan Stanley today, I don't know if Morgan Stanley is going to pull a Goldman Sachs, but I think if it holds around 31.50, maybe in a day or two you get that trade. Also looking, these lower level trades like the potential of a Twitter here and there. And then we've had our calculated leaders like your Facebook, your Google, your Amazon. But now that you're coming into earnings, it makes it a bit more difficult. And just make sure you know that whatever stock you have, do your homework and know when its earnings are coming out. The last thing you want to do is have a tier 1, 2 in a position. And you're like, oh, I didn't know earnings were coming out, and then you walk into a disaster. So make sure during earnings season you know what you own, how much of it you own, and when they're reporting, and what the thought process around each name is, whether it's priced for perfection or it's in the doghouse where it doesn't need to do much to get one of those bounces. And knowing the feel of it could help you trade it better thereafter.
great advice from Scott Redler. Know the fundamentals, know when those earnings reports are coming out so you don't get caught off guard by any sudden moves in the stock. Scott, thank you so much for joining us this morning. We've been on the line with Scott Redler. He's the chief strategist at T3 Live and T3 Trading Group. Have a great trading day, and we'll talk to you again next Monday morning.
Sounds great. Have a good one. Bye-bye.